Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, February the 5th, 2024. Basically, continuing to follow current analysis, but we had another day that was actually led today by a component that led us up higher last Friday, and that is NVIDIA. So NVIDIA ended up putting in a very solid, strong day, now closing in on 700. And so it's just been incredible to watch. But the rally does continue. The fact that what I talked about over the weekend in the big picture update was that the NASDAQ needs to get itself above 17,993, I think that high was. 17,793. So it needs to get above there to put in a new high to complete minute wave 5. And as I have been discussing, even if we take a look over at the S&P, which I'll do in just a moment, it's exactly the same count and it's exactly the same picture. So I'm refining the internal counts just a little bit. And let me show you what I'm doing. So just to go to a little bit of the big picture, so we're going to stick to the hourly chart. And so on that hourly chart, we're within minor wave 5, and that's minor wave 5 of intermediate wave C of primary B. So we're working our way to the completion point for this primary B wave, which began in October of 2022. Now, just to kind of also update some important things, and those being that part of why I'm really believing that we're still in this B wave and that we're not just going to start breaking out and just keep climbing. Yes, we may still have some additional upside and things could become explosive considering that the NVIDIA does not report until the 21st of February. So today being the 5th, we basically have 3 weeks in one day. So 3 trading weeks in one day. So with that in mind, actually more than one day, if I look at the calendar, it makes no difference. So in 16 days, NVIDIA will report. And so a lot can happen in 16 days. That much I can tell you as we can witness through our own trading. But I feel like we're really kind of starting to close in. So let me break this down. So I'm still pretty satisfied with the 1, 2, 3, ABC 4, and we're in minute 5. So as it stands right now, that our Fibonacci relationships that we're putting up here, those are wrapped around a minute 5th wave. On a Fibonacci basis, we make comparisons between a 5th wave to a 1st wave. That's the measurements that we're actually putting out there. And the most common then is that wave 5 will be equal to wave 1. And accordingly to where we are right now, that's going to come in at 17,929. Now that for sure gets us above that 17,793, and it gets us nicely above it. Now, how are we going to get there? Well, at current levels, I'd hate to see that we're going to move sideways to lower for the next 3 weeks. So I say that we could probably get there and surpass it on the heels of today. Again, it was NVIDIA. What happens if, and also Apple, I've got to say Apple was up there because Apple saw a recovery. If Apple continues to recover and pushes itself back towards 190 or above, well, that's going to add some oomph to any rally that we might be doing. And that's provided that NVIDIA also continues to rally, gets to 700, and then keeps going. And that will also benefit this rally. And mind you, as I walk over my list out of the Mag 7, it was just Apple and NVIDIA. That's who was up today. All the rest were down. NVIDIA is the last to report. So is it going to be a classic buy the rumor, sell the news, or whatever, whatever you want to attach to that? We have to wait and see. Now, I do believe we are at an important juncture, or we're getting close to it. So let me open this up to kind of go over a little bit. So now what we're looking at is just actually this fifth wave. So how I'm going to count this is 1, 2, and then we can say 1, 2, 1, 2, 3, 4, 5 of 3, 4, and then we're in the fifth. Or it kind of can be a 1, 2, 3, 4, very strange looking, but I'm going to put it back up here as a 5. 1, 2, 3, 4, 5, and then we sink in a 2. So this is a 1, and this is a 2, as ugly as this is, and this is a 2, and then 1, 2, 3, 4, 5, 3. So again, we're into minuet wave 3 of minute wave 5. And then we have a 4, and then again, we're still in that 5. And even if we come into this 5, we could say, okay, 1, 2. Because it was a pretty decent rally today, and they kind of held on to it. And then at the very end of the day, went through a little bit of selling. So again, primarily, most of that selling happened pretty much started within the first hour of trade and finished by the second hour of trade. So I'm really torn, or not torn, but I'm really leaning towards, that's the word I wanted to find, that it's 1, 2, 3, 4, and we're now just beginning the minuet wave 5 of minute wave 5. So again, I could probably I'll put the labeling in, but the chart gets really kind of clogged up, so to speak. But I'm going to leave it as 1, 2, 1, 2, 3, 4, 5, 3, ABC 4, and this is 1, 2 of 5. Now, what else can I add? We have for the minute fifth wave, and what we could then add, right, if I'm going to call this minuet wave 1, then we could connect this. The other side of this coin, here's the other side of the coin. I'm going 1, 2, 1, 2, 3, 4, 5, 3, 4, and we're in the 5. Or we have 1, 2, 3, 4, 5, 1. Minuet wave 1 of minute wave 5. ABC, minuet wave 2 of minute wave 5. Now, if that's the case, we're beginning a third wave. So let's just take a peek what this could actually do. So we're going to be looking, again, our comparison is wave 3 to wave 1. And wave 3 would be equal to wave 1 at 18,108. Could it do it? Yeah, it could. And if it's going to go full bore, which would be that wave 3 should be a little bit longer than wave 1, our next level is up here. Now, am I really expecting that kind of a move now? It could. I'm not necessarily looking for something that strong right now. So maybe here, that could happen. Now that's under that type of account, where this would be minuet wave 1 of minute wave 5, minuet wave 2 of minute wave 5, and on we go. So keep that in mind. We're going to let the market tell us, by the way. So I'm going to remove that one. And now if we're down to 1, 2, 1, 2, 3, 4, 5, 3, 4, and you know what? We can start to match up some of this. We start to look at those internals, and we want to see if they actually match up. If I'm just counting that this was a little wave 4, look what it did. Right? A little wave 4 came down right to 382, dipped below it, came back above it, so all is good. And what's the most common for a fourth wave? 382. So it fit very cleanly there. Now, if this was going to be wave 1 and this is wave 2, let's go take a look and see how that one fares. And again, we're going to use our fibs, retracements. Again, 382. So there's not a whole lot of difference taking it from here to taking it from there. Both fit as 1, 2, or 1, 2, 3, 4. Both fit. So what we can draw from here is if it is a 1, 2, then we know it's going to be a lot more. And I have no place to anchor wave 1. If it's a 1, 2, 3, and this is a 4, now we're just looking for that internal component. Well, then I have something to anchor. I go there, I bring it up to here, and I run this over to here. Now, the deal is that, boy, now we need to go in and to realize that, well, okay, let's start to edit. We'll take away the 618 because it's already exceeded. And the 1%, it's already exceeded. That leaves us these two, 618 and 2.618. 2.618 for minute wave 5, by the way, comes in right up in the neighborhood of where, or excuse me, minuet wave 5 comes right up into the neighborhood of where minuet wave 5 was going to come up. So again, we start running into those two areas that the fibs for fifth waves match or are very close to matching. That draws my attention. That's where I'm like, okay, there's a little bit stronger that this is a level. And 1.618, 17,097, yep, it clears that hurdle, but does it clear that hurdle? Just barely. So again, but this, if this is 1, 2, 3, 4, 5, I don't know. I'm going to leave it up there right now because obviously we think it should provide some resistance. But this starts to take on a life of its own in that it's 1, 2, 3, 4, 5. Now, above that, we would have to go back over here, go like that, add the next level. And that's 3.618, and that's 18,000. So could this, once it breaks that, it throws it all the way up here into the stratosphere, is what I would call it. But we need to kind of get ourselves above even the 1.236, right? And this is 1.618 is minor wave 5 would be 1.618 times minor wave 1 at this level. So it could work. Here we have 1.618. It could work. But I'm going to be looking for a much stronger catalyst. Now, and to be honest with you, I say that, and then I have to realize it's like, be careful what you're looking at here, dude, because, you know, it's not taking much to foot these markets higher, particularly the NASDAQ, because of the levels that these individual companies have reached. I mean, we just take a look at my list here, which is just my, stock list. We're hard pressed to find something below $100. In fact, when we start looking, Meta's 459, Microsoft's 405, Netflix is 562, Nvidia is 693, PayPal below 100. Yippee, found one. Tesla 181, which it dipped below 180 today. So, they're still up there. And then we still got stocks like Lam Research, Broadcom, that are just like way up there in the stratosphere that continue to hold this index here. Now, if they begin to move, and then along with everything else, say, for example, we come in and tomorrow Meta starts to go again to the upside. Microsoft starts to go again to the upside. Nvidia starts to go again to the upside. Netflix comes through on the upside. They just have an up day. We will be up 100 or 200 points pretty quickly, because for a lot of these stocks, the same as with the index, we're into uncharted territory. Never been here before. Well, where do we find resistance? Through Fibonacci. There may be some other means, but that's the primary one that I use. So yes, I am looking for at least a move above 17,800. That clears that burden. So, and barely clears this. So this level, 17,929 to 17,950. We can say 17,925 to 17,950, making a nice bigger window. That's going to hold a lot of interest for me. This, a pause in the action. This, a little bit higher interest. Now, moving averages, they're all kind of, still doing okay. We got the 50 back above the 200. The 100 needs to come back above the, oh, that's actually a fib. And they got the 200 right above it. But the 100 needs to get above the 200. They're both moving flat simply because of the activity. Now, strong, the decline was okay, strong rally. Afterwards, it actually took us above where the decline began. And look, the MACD is telling us market internals in terms of like strength, it's very, very limited. It was even more limited today than what we've seen in the past. Now, when you have to consider that within the NASDAQ, 50% of the NASDAQ moves currently are being attached to what happens within 7 stocks. And in the S&P, it's 30%, which is why these two are moving so closely together. All right, so, but moving average-wise, no real damage. The market internals, still pretty much the same, not looking very good. Let's go over and take a look at the S&P. In the S&P, it's also the same story, and I'm going to be right here. So we're in that minor fifth wave, and we have minute 1, 2, 3, and 4. We're in minute wave 5, as I left it on Friday, or yes, Saturday. I had counted 1, 2, 3, 4, 5, and said, yep, I can count 5 up to here. But it's the same. I can get the same thing going. So even if I'm going to look at it, go like 1, 2, 1, 2, 3, 4, 5, 3, ABC 4, 1, 2 of that fifth wave. Possible. Same deal, I can say. 1, 2, 3, 4, 5, minuet wave 1. So, and we're going to have the same conversation in about 2 seconds. In that I'm going to be looking for, come on. We'll go up here, just below 382. Almost got to 50%, but as a wave 2, acceptable. Now let's just double check to see what's it look like if it was a wave 4. And there we take it from here to here. Oh, come on. I did that wrong. Now we're going to try that one again. Add there and to there. Almost 50% even for a wave 4, but it was acceptable. 50% is acceptable. And now it would have been a 4. So here again, we've got the same story. Is it a 2? Is it a 4? Well, we'll go on either one. If it's a 2, we're going to come down like this. We're going to go like that. And 618 is 5,017. So it looks like 5,000 remains strong that we will get above. Now, for a third wave, this again would be 1, 2, we're in 3. 100% is 5,067. For minute wave 5, 1.618 is 5,084. Well, if we get a 3, a 4, and a 5, yeah, okay, maybe. But it really kind of pushes it up. This kind of stands up by itself, but it pushes it like 51.16 up to 51.71. That's a nice little zone. But this would be the third wave. So that might have to come down and might turn into we're looking for an additional level. Now that's a wave 3, right? 1, 2. Let's take that down. And now we're going to go over and let's open this up. Let's go this way so I can see my insides here. We're going to go there, we're going to go there, and we're going to, yep, I'm going to bring it up to here. Now, let's bring this back down. And we're going to see it's actually the kind of the same thing. Right here, it's 44,991 is where wave 5 would be equal to 1.618 of wave 1. So minuet, we're in minuet 5, then it's going to be there. Or we have 5,001, and that would be for minute wave 5. Or it basically touched it, very close to it. So that one I'm already looking for it to kind of be taken out. And as far as Fib goes with minute wave 5, our next level is way up here. Now, okay, so if we're going to count this as 1, 2, 3, 4, and we're in that fifth, and this is a 1, 2, we're looking for a 3, maybe that's going to start to break 5,000. You know, maybe we'd be looking for that to get up to 5024. And then we get a 4 and a 5, and so maybe we still get up closer to this one. So we got a big black hole in between here, should this not contain it, and we get through that call wall. So we're going to see what it all can present to us. But the S&P also, excuse me, needs to get itself above 49.98, which before it did. It got above everywhere it needed to be. But now we're extending. What happens if this is 1, 2, 3, 4, 5, and this is ABC, and then, well, what's this? A B? So that's an A, and this is going to turn into a B, get us back close to that level, and then come back down in a C? Could, but you see how it'll turn itself into a flat? So we'll just be wasting time versus price. It'll stay in a sideways action. And it can do that. We know it can do that for a long time. So not a whole lot, but we kind of refine our levels. A little bit easier in the NASDAQ, I think, today to kind of make some money, unless, of course, you caught that sell, which was nice because it was pretty much, it was an hour, but it was pretty much just like ding, 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 ding. And you kind of had to ride out a little bounce here and a little bounce there, but you got all the way back down. And that's what the ticket was all about. So again, same deal. Market Eternals, pretty seriously decaying. Kind of like theta, right? Just decaying almost instantaneously. And then here again, we need to do another reset. If this thing wants to do another one of these, like we saw, that would be nice. So is it resetting again? And we're going to bing, possibly. But MACD and RSI continue to show that they're really the market internals are not looking that pretty. Leading indicators, leading economic indicators have been declining. If I just let me take a moment here to kind of go over this. I'm going to come out to this daily chart. Here is the October 2023 low. So here we have the October 2022 low. And the leading indicator started to decline. And then together with the market, they rallied. Then they started to decline hard again. But when it got here, the market decided to turn and decided to take a runner, which it's still doing. The leading indicators continue to go down, which they're doing. So there is out of sync between what the markets are doing versus what the economic indicators are suggesting. So now we start to get to both sides. It's like, oh, wow, what's kind of going on here? Well, it's a handful of stocks. It's artificial intelligence. It's the Fed's going to cut. It's the Fed's not going to cut. I mean, I don't know if you've been watching what's happening over in the treasury markets, but good Lord. One day it's up over 2, the next day it's down over 2, and the following day it's down over, this is the 30-year bond, down over 1.1 and 2/3. No, 1 3/4 actually. And just bam. So it's not just the equity markets that are finding themselves, and it's like what are we doing and why are we doing it and what comes next? Still up in the air. I'm still going to look for upside here. I still think we got it to do, and we're not done just yet. So that's where I am going to leave it for today. And our next update will be on Tuesday, February the 6th.